Good morning, good afternoon, or good evening, depending where you are on the planet. And welcome to the beginning of February, the Thursday, the 1st of February, Bull versus Bear webinar. Steve Miley on the call here for Trade Day. So two things before I start properly. One is I have had some issues just recently I think the last about 10-15 minutes actually, as I went to set up for the webinar with regard to my Mac slowing right up, and I didn't have time to do a shutdown and restart before we started the webinar. So if things are a little bit slow and grind to a halt in here, my apologies. I'm assuming you can all hear me now. Can I just get a yes if you can hear this all okay, please? But yeah, I'm just having issues in here. I don't know why. It just seems to have got really slow 10 minutes ago and things opening pages and stuff, and I just haven't had time to restart. So can I just get a yes that everything you can hear me all okay, first of all, and I'm coming through loud and clear. If someone can type into the chat. The other thing to say is we're on sale. We launched the sale overnight UK time, early this morning European time, in the afternoon if you're in Asia, and in overnight if you're in the US. So we went on to sale. We have a 50% sale running. No defined announced end date yet, but I would get them while they're fast. It's only probably be we're only going to be on sale for 2 weeks max, maybe only a week. Okay, guys. The sale is on at the moment, 50% off, only on the valuations of 50,000 and above. So that's the 50, the 100, the 150, and the 250. We are not on sale on the 25 or the 10k accounts. Okay, so it's for the 50, the 100, the 150, and the 250. We're on sale. Half price, get them while they're hot, as they say, okay, for a limited time only. It will certainly be 2 weeks at the very max that you can sign up. Okay, so I'm going to go through the usual run through in here today. Obviously, we're going to focus on the Fed. We're going to focus on some of the data we've had. We're going to focus on how it's changed the charts and what to look out for going into today. So first of all, the Fed. Central banks in a willingness to cut rates, and basically ruling out March. We'd already said this is likely happening. The market already started to price in that we wouldn't get a March rate cut, and Powell said more data confirming the trend. But it looks like we will get a rate cut more likely now. As we go into spring, early summer kind of time. Okay, not at the March meeting, the meetings after that, but we'll look at that in a little bit more detail shortly. So the market response to the Fed has been complicated with renewed jitters over the US commercial real estate. Obviously, we had a lot of issues with the real estate situation in China over the last few years, and particularly over the last year, and that has been growing concerns about commercial real estate in the US as well. New York Community Bank Corp threatened to grab the headlines away from the central bank. It seems to slash its dividend stockpile reserve, sending it down 38%. So just as we had that scare. Remember, what year was it? Was it 2022 or 3? I can't remember. 2022, I'm thinking, right? Or was it 2023? 2022, I think. We had the wobble with the regional banks here. Maybe we're looking for something not as bad as that, probably, but something similar to that. Tech earnings, obviously, we've been talking about the Magnificent Seven coming through. We've already had in here Microsoft and Alphabet, which were down significantly yesterday. So a big chunk of the sell-off yesterday, remember, was already happened before the Fed, due to concerns from the night before, even though the numbers that we actually saw, the headline numbers out of both Alphabet / Google and Microsoft were decent. Behind those numbers, there were certainly some negatives, and that saw Google down 7% yesterday and Microsoft 2.7%. So dragging the tech industry down, the tech sector down. The Nasdaq was already down, remember, way over a percent before we even started the webinar, before the cash market opened, and before the Fed yesterday. And then we saw a further nudge lower with the Fed really pulling the rug on any chance in here for a March rate cut in here. And then we've got the Bank of England in here. So that is going into focus, obviously, today. We've already had that, okay? So the Bank of England left rates unchanged, but a nod to a potential, and I'll talk about that in a second, nods to a potential rate cuts as well going forward, like the Fed, okay? So what else do we have for you in here? So that's what we've had coming through thus far. Let's go back to the... actually, where's the calendar? No, here we go. So yeah, so from so that's from the page here that you just below where you are on. You can get this in this column in here. Not going to stay on that page because I'm always going to hear myself. But yeah, so the Fed. This is just talking about the Fed. This is from Live School. You can get this. It's available. I'm just going to post it in the chat. I think it's really good if you guys can start using this as well as the 5 things to start your day. It's a really good resource in here. But talking about the Fed and the Fed's policy, and then the Bank of England. So they opened the door to a rate cut for the Bank of England. And we had basically 6 members of this. So there's 9 members in their MPC, the Monetary Policy Committee. 9 members, 6 said leave rates the same. There was a vote for a rate cut, but 2 wanted to actually hike rates in here from the Bank of England. So far from a consensus in here at the moment. What else have we? So on the back of the Fed in here, we did see a significant sell-off, obviously even pre-Fed, but then also going into the close in here. So S&P was notably down. We're kind of hanging on to a bullishness. You see this long-term trend line. It's a really good trend line as well. Comes up in here from November, drawn off of this low in here at the beginning of January. And then we get the third touch, the magical third touch back here at the end of January, and we're coming down towards it. We're looking for that trend line to try and hold in here, and that's going to be really important. Watching the progress down towards and holding above that trend line. That's down. The trend line is down in like the 48.50 kind of area. It obviously moves on an hourly basis. And on the Nasdaq, a similar story in here, similar trend line in here. Again, the same 3 points. You get that magical third touch in here. And then the market coming down towards there. That's more like somewhere between 17,000 and 17,200 on that trend line. And again, that's moving the whole time. So I think if you've got on your charts, you can get both these trend lines on. You can get these reports from right below where you are right now. You go take a look at those reports in here. We've also got interestingly in here, we had bonds go the opposite way. So stocks down, bonds up. You had this really high correlation, throughout Q4, where bonds and stocks were both rallying. There you see the bond market going up, and there you see stocks going up. And then you've had a dislocation more recently with bonds going down and stocks continuing to go higher. And then yesterday, after the Fed, bonds actually went up. Remember, up in price, lower yields. Actually went up to lower yields. So actually looking at a more bullish outcome for bonds, lower yields, because the Fed did say they are going to cut rates, right? And the market's kind of, I think, happy with that. The bond market's more happy with that. They do see lower yields coming going forward, but not seeing the Fed putting the market in any kind of the economy in any jeopardy by cutting rates too early in here. Let's take a look at the calendar in here. What we've got coming up. We've already mentioned we've had the Bank of England in here voting 6-2 to 1 on a rate move in here. So unchanged at the moment though. We've also had some PMI data started to come through today. So we've had the flash PMI data. Actually, no, sorry, this is the final PMI, not the flash PMI. We're 1st of January. Sorry, we're the 1st of February. The final numbers for the Eurozone, as you can see in here. So we had for France, for Germany, for the Eurozone, and for the UK. You can see mixed in here. So missing in France, beating in Germany, just bang in line for the Eurozone as a whole, and just missing and it's only just missing in France, by the way, and just missing in the UK. We have that data coming up as well going into today from the US. So we had the S&P Global US manufacturing data first of all. That's at 9:45. Remember, that is not as important as the ISM number that we get 15 minutes later at 10 o'clock. So 9:45, that's Eastern time, remember. 10 o'clock Eastern time, the ISM data. That's the more important piece of data as we go into today. Let's round off whilst we're looking at the macros in here with the micros, with the earnings. So critical then after the bell. Sorry, I missed out Meta as well. So we've got Apple, Amazon, and Meta. I'm going to question mark Meta because that wasn't on there early this week, so I'm not 100% sure on that. But we'll return to that. Maybe that is correct. But we certainly have Apple and Amazon reporting today. Let me just go back to 5 things to start your day to see if they what's coming up. Bank of England decision. What we've been reading. Where's okay? Normally they have what's coming up as their number 5, but they haven't. They've run out of room for it though. We're going to have to trust that Meta is coming out today, but we certainly have Apple and Amazon. I know that 100% in here. Apple and Amazon out. These are after the bell. Meta also, Meta, aka Facebook, coming out after the bell. So it's going to be a huge focus on that and to see if they can get this bullishness that we've seen. And I think the markets could easily go, be looking at holding above those, as I say, those trend lines, and rebounding off of those trend lines from a technical perspective, and that would then point to obviously some cheer coming from these stocks after the bell, the reporting after the bell. So stock futures rise before Apple Meta earnings. We're already getting a rebound going on overnight in here. So yeah, that is Meta today. Sorry, so my bad in here. Next wave of tech mega swaps earlier. Earnings due late Thursday. Bank of England wants more evidence. We've already covered that as well, echoing what the Fed said. So pretty much following what the Fed there. And Wall Street gets reality checked as Powell saps fast rate cut bet, stops drop as Fed chief. So we've already covered this as well. Bonds hold gains still as traders still see aggressive eases. So you can see what's priced in differently. Stocks were looking for more aggressive rate cuts. They were disappointed that they weren't getting them in March, but bonds in here actually took it some cheer from the fact that they still see the Fed on the path that they're on as being more aggressive than maybe was being priced in. So if we go to the CME Fed Watch to in here now, obviously March in here, now we've got a 66% chance in here. So this is actually probably, I think, fallen to where it was right for March. Yeah, we were this has gone up. We were at 50%, right? Sorry, we're around 50-50. Now it's up to like over 66% in here. So the market really now fading charts for the March rate cut. But if we go further out, as soon as you go to May now, there's only 7% chance we don't cut by May, and by June we're actually looking for 55% chance that we have cut in here by there's 2 cuts by June, and only a 6% chance. Remember, this here in June is only 1 rate cut. So for the market now is pricing in a 94%. We've had 2 rate cuts. So once they start, they're looking for rate cuts to come every month. So May, June, July, August, September, December. 1, 2, 3, 4, 5, 6. So 6 by year end. The market is still pricing. Remember, it was just looking for the start in March. It was always been pricing in 6. There we are, 6 rate cuts by year end, 375 to 400. We're currently 525 to 550. So that's the consensus, is 6 rate cuts, 1. So once they start, the market's looking at 25 basis points every month in here, and pretty much nailing in that's what it's looking for. And so at the end of the day, the bond market's taking that as a positive, and the stock market's taking the fact that we don't get it earlier in March as a slight negative in here overall. Let's take a quick look on, but we've got similar stuff coming in here. So Bank of England says rates under 2 review as inflation to dip to 2% in here. Nothing really much more in here out of Reuters than we've seen already. And if we go and take a look at the overnights, so Nikkei got pulled down lower as the US stock indices went lower. Japanese stock index and the Hang Seng actually up 0.5% overnight. If we go and take a look at European bourses or European exchanges, 0.5% up in here. Nearly 0.5%, actually 0.4 up on the UK FTSE. After that, Bank of England. So the Bank of England has taken some cheer, the FTSE, from the fact that we had the nod that we would get a rate cut at some point out of the Bank of England, sooner rather than hopefully later. And then the German and French indices. German's pretty much unchanged. French index down here. Maybe some disappointment on those PMI data in here that we saw and just looked at out of France, Germany, and the Eurozone. Taking a look at the US on the overnight in here, it was a big move down. Say the S&P was down over 1.5%. Nasdaq, equally significantly lower yesterday. But on the overnights, for just over here, that's on the cash index. If we have a look at the futures on the overnights, what we'll see once it loads is we've seen a rebound. So 0.6 back up on the Nasdaq and nearly 0.5% back up on the. So let me quickly in here. So a significant sell-off. You saw we went down to and through on the Nasdaq, this 13-period EMA in here. But if I do put it on, what might be easier if I go into, let me see if I can quickly log into my trading view, because that's where my analysis is done. Is it going to allow me to quickly do that? Let me see. If I can get to those, it'll be easier to look on here at these. Can load these up. Where are I? March contract. Here we go. So there you go. So you can see we're coming off some ways above that trend line in here. We've had the rebound already. That trend line comes in around 48.50. So I'm looking for that to hold. That's going to be critical. If you break below that, it's going to really change things around. But 48.50 is critical. And you see the Nasdaq's, still some ways away. Oh no, hold on one sec. Got switched for the March contract. In here, it's tracking up to around 17,110 in here at the moment. So those are the real big critical numbers on the downside for me that would actually shift the view to being more bearish. But you can see we're already rebounding. Now we could have a big move today post the bell. I don't think it's going to come before the bell, but after the bell on the back of that data, okay, on the Amazon, the Apple and the metadata, we could see a significant move. So these trend lines, I think you can put those onto your own charts. I think they're going to be super important. But the rebounds we're seeing already, see the Nasdaq's trying to get back above that 13-period EMA in here as we speak. The S&P nicely went down, just probed just below it, and in the late trading yesterday, but then managed to clawed its way above. So it's kind of playing with that 13-period EMA and rebounding. So my view remains bullish. I think we're going to get a bounce. I think we'll claw back into the range. I wouldn't be surprised to get back about half the range. So looking at this as a Marabuzo candlestick, yesterday's price action, looking for either a move just back on yesterday's range to 50% or from the top to the bottom of 50%. So that will be my initial target going into today. So there's the Marabuzo, will be off of just yesterday's range. So it'll be there. We'll be looking at. So just very quickly, I'll be looking for. Oops. So we'll be looking at this move here, either the whole move, or we'd be looking at in here the move just from the Marabuzo. So let me just get from the right high in here. Let me just check be yesterday's high in here, which came in at 49.38. So it'll be off the peak of 49.38. So it's off that peak there. So that's what we'll be looking off of. So somewhere in here, we'll be looking at 50%. So 50% in here from the top is 49.11. 50% in here from the Marabuzo, just from yesterday's price action, comes in at, where's that? There it is. So it's right near the 38.2 actually. So this little cluster, I was talking to another trader, actually Clinton, I don't know if Clinton's on, but I was talking to him about clusters of retracements. So this is really interesting here. Like, see the way these retracements are all clustering, So I think this is from the whole move, right? And then this is from the move just of yesterday. So there's what, they're both drawn off the low in here. So you've got the one drawn off this high and one drawn off this high in here. And see the way these two are clustering. This is going to be a really couple of important little resistance areas. And I think the minimum targets in here for me, as it's like, so it's 4900, 4902, and then these are almost over the top of each other, 49, 10, 11. So I think those are the kind of upside levels where you can see like impulsive moves already up through there. And then ultimately, I think we can get back up to here, the 61.8% of the whole move down. That's 49.22, and maybe even recapturing yesterday's down move. That the recapturing yesterday's down move wouldn't be thought to after the bell, but certainly these lower targets at 49.0102 kind of area, 49.10.11, I think they're very attainable before that. And you could do the similar analysis on the Nasdaq. Okay, so you've got the sell-off. You've got 3 points here. You've got the sell-off from the very top. You've got the sell-off from this week, from the peak to trough, and then you've got yesterday's sell-off. So it's going to be far more pronounced, and you'd put those kind of same Fibonacci's. I'm not going to go through them all and do that, but you'd have yesterday's sell-off and do the retracements. You do the sell-off from here, and then you do the sell-off from the top in here, and see where they cluster. I think we could easily get back yesterday's losses in here today. So before the data, the earnings data, before the close. So that's up at 17,484. So easy looking for us. You've already got back half of yesterday's losses already in here today, pretty much. If you just look at, I'll just put that one on. I'm not going to do all the work for you guys, but in here, you just look at here, we're already probing about the 50% level already. So getting 100% back is easily done. I think the bigger ask is probably going to be then trying to get back the 2 days worth of losses. And look at yesterday's, the 50%, the halfway of the 2 day losses comes in at basically yesterday's high. So yesterday's high is going to be a really important point as well. So watching for Apple, Amazon and Meta after the close. I think we're going to have a positive move going up into today, and then potentially an explosion after the bell. So keep your powder dry to trade post and when we reopen on the futures after the 1 hour close. I'm going to leave it there. I'm going to wish you all a great trading day. Please do get the word out there if you're in your own Discord groups that you have. If you're in our Discord group, pass on to other Discord groups you might be servers and members of. Anywhere else you're members of, please do promote the sale. Feb50 is our own internal discount code from Trade, or if you want to promote one of your favorite influencer, promote their discount code. It doesn't bother us. But Feb50, FEB50 is the discount code if you want to use it, or promote it, please, around and get some of your trading community to come over and give Trade Day a go. All right, guys, I'm going to leave it all there. I'm going to wish you all a great trading day. Take care, stay safe, and I'll be back with you tomorrow for the TGI Friday. Thank God it's Friday. Bull versus Bear, final webinar of the week. Bye.